Hello, this is Solomon Davis, Right Side Trader. Today is September 1st, 2024, and this is my little monthly thing that I kind of do, a little something special. One guys had told me I should try to give a little something. Let them know a little bit more about what I'm doing and how I do it. So that's what I'm doing here. And I'm following up on my thing that I did, last month was on indicators. I'm following up with indicators. Again, this is all for educational purposes only. As we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other before getting involved in trading. Get educated. Find your coach. Here. And all. But let's kind of take a quick look here what I'm going to talk about when it comes to indicators. All right. First thing, let's just start off with a chart. This is how I do it. And when it comes to indicators, all they do is try to give you an indication of what's happening in the market. And one of my main indicators that I like telling people is an indicator is the candles themselves. And again, and that's why I like using candles. Because what can you see from candles? You can see, if the market is trending up. Let me just draw some lines here. You can see if the market is actually trending up. You can see if the market is trending down. You can see that the market has made a double top. You can see the market is trending up just by looking at the chart, looking at the candles, and all. That's one of the things that you're looking for indicators to do for you, show you market direction and all. The other thing that you're looking for indicators to do is to kind of let you know, if you're at the bottom in a market, if you're at a top in a market. Again, right here, we didn't know that was a bottom, but when it came to this point over here, we can see we were at a bottom. I do not, as you can see, the candles themselves gave me an indication at this point right here that I might be at a bottom. I can go back and see at the time that happened, I was making a double bottom that they talk about and all. I can see also that I have indecision in the market at that time. So that's, a couple of things that giving me an indication that this market may be at a bottom. That's what you're looking for your indicators to do. And I don't have, so far, as you can see, I don't have any of the traditional indicators on the chart at all. Your moving averages, all those other things that I'm actually just point out to you too. And that's why you see at times, if you notice some of my trading things that I have put in my trade, reviews, I say no indicators. Again, a lot of times once you learn to see the market, indicators are really not, they kind of give you confirmation of what you may see or what you think you see and all, and that's what you want. So, like I say, the indicator also up here gave me an indication, just looking at the candles, I was making a double top. The market came up to a previous high. It couldn't make any higher. It gave me a doji, and then the following day, it gave me a bearish indication that the market may be going down. That's what you're looking for from indicators. It's not that much to this thing, guys. They're out there trying to make it more complicated than what it actually is. That's the whole thing where it's hard for me to work with people when you got all these other beliefs and stuff and you're not able to let go of them. So that's a problem that you have to get over before I can work with people. And when I look to talk to see if they are their mind and really already set on things and they're just trying to get confirmation of what they think they're seeing. It's not working. If it's not working, it's not working. But that's what you're looking for indicators. Indicators, again, going to give you another thing that I look for indicators to do for you. They're going to give you an entry, a target, and a stop. What I just say? An entry, a target, a stop, and a target in the market. When it comes to indicators, in my opinion, that's what you're looking for. You want that indicator to show you where you want to get in the market, what's going to be your target, and what's going to be your stop. Let's go back over here to the chart again. On the chart, so just with no indicators at all on this chart, it gave me an indication that I could have an entry to the downside when it came back up here sometime after this point, all according to how aggressive you are. It could have gave me a stop. My stop would have been above this previous high over here, or if I was using this candle pattern, it could have been this high right here for my stop. My target, my first target, could have been all the way back down to this point where I saw the market took off from. So just looking at the chart, it gave me the three things that I think you need from an indicator. And from that indicator, you need a point to enter the market. Based on this bearish pattern, you enter the market somewhere along this candle or somewhere after this candle. Your target would be down here at this previous low that it had made in the market. If you're being, think it can go all the way down there. So again, you end up creating a range down here that it can go to, and then your stop would have been this point right here. If it went back, if it didn't do what you wasn't doing what you expected to do, it probably would have broke this top here. So that's the whole thing when it comes to indicators. And based just on the candle patterns and just based on the chart, again, this is all some traders need, But we do use tons of indicators when it comes to trading to give us those entries, those stops, and those targets. Now, yeah, I'm saying a lot here, and I'm kind of like giving you. That's why again, this is for the basic stuff that people need, and people who've been trading a long time, I think they forget that's all your indicator should be giving you. It should only be giving you a place to enter the market, a place to stop out of the market, and a place to take profit. For you more advanced players, just got to remember that's the whole key. Now, when it comes to indicators, there are tons of indicators out there, and that's why I say it can be so confusing. They talk about all these different indicators, and the thing is, when it comes to these different indicators, they may be already using them, and then they're trying to tell you this is what they work, this is what works, this is what works for them. And that's why even my set of indicators, the set of indicators that we use at Right Side Trading, we try to show you how they work for us, and we try to help you see what we see with the set of indicators that we're using, and if we can get you to that point and show you, again, we're not going to just throw something at you. We're going to show you how these things work, and they work time and time and time again. That's the whole thing with your indicator. Your indicator should be showing you repeatedly that same entry, that same target, that same stop works high percentage of the time. And that's all you're looking for. Nothing is 100%, but if it's working a high percentage of the time, that's what you want from your indicator. And as you can see, there are tons of indicators here to actually choose from. And that's what's here. So that's why it can be so difficult. You think you have to use something here. You want to use something that somebody has proven that it actually works, and that's what you want to use. But a lot of time what happens is, for whatever reason, and that's how it was when we started. I know when I started trading, some guy was trying to show me Bollinger Bands. And the Bollinger Bands, I could see it, but it didn't, I kept seeing, okay, even when I first started trading, it was kind of like, where do I enter this thing? Where do I take my profit from this thing? Where do I get out of this thing? And that was the thing with Bollinger Bands for me. I couldn't, at that time, I couldn't see a clear entry. The target wasn't clear to me, and the stop, I think, didn't even exist to me at that time. But that was just me because I was just getting started. I hadn't spent a lot of time with it and I really, at that time, I really didn't know what I was looking at. That's why, again, it gets back to the basics, just being able to see the candles and the charts themselves. Once you see that, then these indicators help enhance what you're actually seeing out there on your chart. I'm going to show you the whole thing with the whole Bollinger Band for me really quick here. I'm going to go ahead and apply. This is how you select your indicators on this particular platform. I can select the indicator, add it here, And this is one way. There's many ways of doing this, but this is just one way. And I'm leaving it at the default settings, whatever they happen to be here. And I can select that, and I put it on there. Boom, apply, and say OK. And this is what it looks like. Now, I think the guy was telling me, this middle line is what they call a mean line. This upper line is what they call a resistance line, and this bottom line is a support line. So anytime it comes down to this bottom line, and all that went through this bottom line, and I'm watching the thing through, and when it hits this bottom line, I'm looking at a bullish trade first, because that's what I do, and all. I could have said, okay, this is my entry. I got to close here. So if it comes back down here, but it had closed here, I would have been afraid to take that trade. Again, saying, okay, is this thing going to continue down? What is it going to do? Then the next day I see it did. The next day it did gap up above there. And do I take that trade now? Because again, my entry would have been here somewhere along this day, based on the way when I first started. This was one of the first indicators that I saw, when I was looking at indicators. And my target, based on him, he said it was always going to revert back to the mean. He used to tell me it's going to revert back to the mean. So I would see that was at anywhere from 390 to 394 and reverting back to the mean. At that time, on that particular day, this would have been around 400. It wouldn't maybe have been exactly like this, looking at it in the live market at that time, but that's what I would have saw. So it did give me an entry, a target. Now my stop, my stop would be, I guess that's the whole thing that was kind of bugging me at the time. My stop, if it comes back down to this line, is my stop. And in this case, it actually would have worked, and in most cases, when it comes down here, it does work. It's just that it was very funny kind of using this indicator to me at that time. So a short trade, this is what really gets you, though, using this particular indicator, because at that time I was trading the market in both directions, no problem. I didn't have the whole mindset that I have now, trying to always go long. At that time, I would actually play the market short. So the short trade, it gave me a short trade, and it came back down here. So that was a very short trade. It gave me another short trade. Oh, that's another, okay. And it really didn't go anywhere, and it kept doing this type of stuff. And then the whole while it's riding up here, do I take a short trade? Do I take a short trade? Do I take a short trade? And that was the way I was. So it got to where, this happens a lot in the market when the market is trending up. It'll hang out above this line, this mean line, and it very seldom comes back down. And that gets back to the other thing when it comes to indicators, you need to have two or more indicators when you're using indicators to help you out. And again, at that time, I wasn't looking at candles and candle patterns to be an indicator. If I was looking at candles and candle patterns, now looking back and looking at this chart right here, I can see, I had a bearish looking pattern. So now that this thing was up here, now this was the time to actually take a trade to the downside. The bands had actually, that was the other thing, once the bands get extended like this, you're looking for them to contract back down, and you're looking for the market to come back down to the mean line. And that was the whole trade at that time when I remember him talking about it and stuff. So this would have been my indication. This whole while back here, if I understood candle patterns and stuff like that, I wouldn't have taken any of these trades. This whole while right here, I wouldn't have taken that trade. This looks like a bullish pattern now. This still is at a top, but I got a doji indecision on the market. I got to wait till the next day, get a green candle. I don't want to take a down trade on a green day. I got another doji. I don't want to take that trade yet to the downside. I got a big push up, which I call a final push up these days. I still don't want to take that trade. Then the next day I got another green candle to the upside. I still don't want to take that trade to the downside. Now I get me a downward trade looking candle. It actually crossed below my top line. Now it's okay for me to go ahead and try to take that trade to the downside. I got a bearish piercing looking pattern. I got a bearish evening looking star. I get into this trade the next day, maybe as soon as the market opens, knowing my trade can come down to this point here. So again, if I did jump in there as soon as the market opened, 405 down to maybe I'll say 496, 495, that's $10 on that trade to the downside. And that's how, again, the stop the stop now, I didn't know about candles then, but my stop probably based on the way I was looking at it before. If I got to close above this, I came back up to this. But now looking at candles, my stop would have been this previous day high and all, or this line here. So again, this indicator does, just using Bollinger Bands and the candle patterns. That's why again it gets back to where you should use more than one indicator on your chart, minimum 2 indicators, I would say, and I like using maybe 3 indicators. That means I'm having the candles, a Bollinger Band, and something else. So I got 1, 2 right now, and then there would be actually be a third, and there might even be a 4th candle pattern, a 4th indicator on my chart to help me out, to help make sure I got a good target, a good entry, a good target, and a stop that makes sense to me at the time. So now that I've shown you this with this particular indicator, let me go ahead and show you the other thing when it comes to indicators, what I like. Let me go down here to my chart, and the other thing that I like, that didn't come up the way I expected. Let's go back over here. When it comes to indicators, like I say, what you're going to be looking for, what is your entry? Then based on your entry, what is your target and your stop? Your entry should always be looking at supply or resistance for going short. Your entry should be looking at demand or support going long. And additional to those things, you're going to maybe be looking at a candle pattern, and then I kind of say, what's that indicator telling you? And it may not be in this particular order. That indicator might give me the indication first, then I'm looking for additional pattern, and are we also at a demand or supply area based on the type of trade that I'm entering, if I'm entering a short trade or a long trade. Now, that's that on the entry. On the target is the same thing. The thing is, the target is given where you're going to make your money. Where's the money? So your target, if you are going long, meaning you are buying something, you looking to buy that something, buy that whatever product you're buying, and it's going to go up into supply or resistance. You're going to be looking also for your target, and that also what can give you an indication that it may be done and has reached the target, can be a candle pattern or your indicator for that long trade. For that short trade, you have sold something, you're looking for the market to go down, you're looking for it to go down into a demand zone or into a support area. And also, you're going to be looking for a candle pattern that may tell you that that trade is done, or an indicator that may tell you that trade is done. So let's go back over. Let's see if we can jump back over to the chart. And right here, let me see if I can slide something over. Boom. The other thing when it comes to indicators and stuff, I got a couple more indicators here for you that I like using and that I look at is pivots that you see on this chart, and I had the moving average that's on here is the moving average that I use on my monthly chart. This is probably a 9 moving average with my indicators and with me a volume indicator. So again, when you start adding more indicators, it starts making things more complex. That's why I don't like having too many indicators, because now you're looking at a lot of different stuff to make a decision and all. It doesn't really matter if you're long-term trading, day trading, you want to do your analysis, you got plenty of time and all to study the market and look at your indicators and see what they're actually telling you, to actually how to place where to enter the market, what's your range for entering the market, what's your target that you're going to be looking for, and what's your stop area that you're going to be looking at. Now, using these particular indicators and the pivots, I'm going to show you on the pivots. I'm going to go here to this area right here on this daily chart. And since this is a daily chart, my pivots, I usually like them to be a longer period than what's actually on the chart. What's actually on the chart is day candles, so my pivots, I would want them to be something longer than that. And here with indicators, that's one of the other things that people really miss out on. Indicators are usually adjustable, and a lot of times you need to adjust those indicators. Like with that Bollinger Band, I just use the default thing, and I was just looking at that. And probably when I first started, I think he did have me adjusting the Bollinger Bands a little bit, and we did some other funny little things with it, because I remember him having 2 lines at the top and 2 lines at the bottom. So we did play around with the adjustments on that. And that was one of the things I did learn right from the beginning from that guy, that you need to adjust it. And the other thing is that you need to have multiple time frames that we're looking at right now. So when it comes to adjusting, yes, you can see a lot of times when you see my weekly trade, my weekly market review, you see I have a quarterly, monthly, weekly, and a daily. And then those pivots on there, they're always different. I have yearly pivots, quarterly pivots, monthly pivots, and then weekly pivots. On the day chart, I have weekly pivots. So I'm changing this to weekly pivots right now. And then this right here, this is a volume thing that I'm playing around with. The other indicator that you will usually have, you're going to have some kind of indicator on this lower thing to kind of show you. Usually you're having things down here to show the market if it's overbought, oversold, or if the market is accumulating or distributing. That's the whole thing that people use the lower part of the chart for. Me, right now, I'm just showing you a volume thing. Because a lot of the things that we do that I like, we do use those at Right Side Trading, and I use them myself in a lot of my day trading and my long-term trading and all. So that's what we're going to have there. Now on this other time frame, when you're using 2 time frames, you're using a lower time frame for your entry and your upper time frame for your management, I would call it, and kind of like tell you it's okay to be going in the direction that you're actually going into. So when it comes to indicators, again, you need to adjust them for the time frame. If you're going to move multiple time frames, adjust them for the time frame that you are using. And when it comes to moving averages, there's like on the moving average thing, we say that on the monthly time frame is the time frame that we use that 9 or 10 moving average to let us know if the market is bullish or bearish. It's not the weekly time frame, it's the monthly time frame that we do that with. Because on the weekly time frame, you would get too many singles saying, okay, it's bearish, it's bullish, it's bearish, it's bullish, it's bearish, and you don't want that. You're trying to have an indicator that's going to give you an indication of what the market is doing, especially if you're long-term trading, day trading, based on the time period that you're actually trading, giving you enough time to stay in your trade, to actually make money, because that's what we're trying to do out here. We're trying to use this money that we have to actually make additional money, And if you have an indicator that's getting you in and out of the market too quickly, that's kind of defeating the purpose. But these days with stock actually trading with no commission, it may not be too bad. But again, you do your own study and your own due diligence when it comes to using whatever indicator that you use and see how it works for you. But now back to these indicators that I'm showing you here. So that means here on this weekly time frame, I would actually want a monthly pivot. And as you can see, it's already set at monthly. Show you here, it's set at monthly, and that's what I want. And the only reason that I'm using this additional indicator here on this particular time frame is to keep you in that trade a little bit longer than normal. This is something to show you, you don't have to look at the candles and all that kind of stuff. You can just look at this moving average. And again, I use this on this weekly time frame the same way I would be using it on the monthly time frame, because I'm the type of trader. I'm swinging and all, and I get into the market. I can stay in it for a few weeks, few months, and all, maybe even a few years if it actually even happened where it stayed above this line. But once you hear me At times when I do speak out about a trade, oh, I'm out of that thing already. It gave me a signal. This is what I'm usually looking at, something like this on a lower time frame. It gave me a little bit of scare in the market, and I'm out. Because again, I know I can get back in as soon as I see something, and I'd rather be out of the market and not take a big loss, keep that loss small, or like if I got good profit in that particular trade, my indicator has given me a point to say yes, it's time to stop out of that trade. Now going for a target, using this particular indicator on this higher time frame, it allows me to stay in that trade long as it's staying above that line. Also, I'm using as a target, if I'm for these are monthly pivots, weekly candles. If I am opening above pivot, I expect it to stay above pivot, stay above pivot, above pivot, stay above pivot. It actually open. We can see right here we open above pivot, but we ended up going below pivot. So this kind of scares me, but I'm still above that, and I go a little bit higher. But then come the next month, I can see that first week of the month, I'm below pivot. It's time for me to get out of that trade. Based on my trading plan, my trading strategy, if I was long, after this first week, it'll be time for me to get out of that trade. Even though I started out above pivot, I'm below pivot. I'm below. I closed right at that. The next week, I would have to be out. So I'll be watching this throughout the week. I say I have to be out of that trade. Soon as one of those days, I ended up, during this week, I ended up stopping below this point. The market ends up closing below this point. I need to be done, And it gave me an indication, just even based on the candles, that I was getting a bearish pattern here at the top. So now I talked a lot about just looking at this, about managing the trade, riding the trade up to a higher target and a stop point. Now the entry on this going long at the time, just looking at this pattern right here. Let me looking at this pattern right here, these few weeks here, to get long, it would have been based on 1, 2, 3, 4 weeks right here for you to actually get long in the market. Come after this candle pattern right here and my volume indicator that I have down here letting me know that money is going into the market, I can get long this week here or that following week. If I didn't get long that week, I'll be looking to get in right away. But what I want to do to show you what I'm talking about, I want to highlight these weeks. And let me escape. I have to start it. I'm going to start it up here like this and down like that. Up, escape. And this is the Dow, and it's the Dow. It usually would show up over here. Why it's not showing up? What's going on with it? I did not do right. And let me do it over. What I'm trying to highlight, that's 1, 2. Really, I really want to highlight 1, 2, 3 weeks from this bottom. So that would actually be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Let's do this 2 weeks here. So it's up here somewhere. Boom. Oh, what's going on? Let me change this to that. And let me go up here. Let me go over here. And let me go here, and go here. Oh, I'm not looking at the same area in the chart. I'm looking for the back and all. But let's do it where I'm looking at. Let me do this. As you can see, I hadn't I'm gonna remove that drawing. Let's do escape. Let's do Control Z, and let's do this. I need to do this. There it is, back there. Let's go here. Let's go here. Now, based on this pattern right here, we would, on the higher time frame, we would have saw for our entry for this long trade that we actually got into, and we was able to stay in all the way up here. Let me just and we stopped out up here. Let me do that also. Where we stopped out at, we stopped out up here. So let me now change this back right here. So we was actually in this trade for this whole period of the time. We didn't get out of this trade until about this time right here. And at any time during this time here, we could have been out of this trade earlier. And I'm going to show you that. First of all, the entry. The entry, again, once we saw this day, let me put an arrow here. Let me see if I can do that. And if it'll show up. Let's put it right here. And right there. You see over here. Let me see if I can zoom in now over here and over here like this. You can see this. This is the this is the scary thing. I laugh because one of my friends and I, we always talk about this based on his indicators and the things that he used. These right here are our entry days. At Right Side Trading, we do not like entering on these type days, but as you can see, on this weekly chart, it was kind of like this week, and this right here is pointing at this candle right here. So based on your trading plan, your trading strategy, this would have been the day that you actually got into this trade long. And let's say that was at, I'm going to put another line here. I'm going to put a price level line here. Let's say you didn't get into this trade until the following day at this price level right there. Boom. You didn't get into the trade until then. So what did the indicator tell you about getting into this trade? Again, it gets back to entry, stop, and target. So entry, based on this week, it'll have been the beginning of a week. Above pivot, stay above pivot. That would have been one thing. Green candle after a bullish looking pattern and after a bullish looking run to get you into that trade. On the lower time frame, you already had seen it on the higher time frame. Now on the lower time frame, this is where you actually enter the market. This is where you actually enter the market. So that was your entry. At this time also, you are above the 10 or 9 moving average. So that was your entry. So now your stop. Your stop has to be, it's based off of your entry. Your stop could have been this little. Now looking at the lower time frame, your stop could have been right here, right at the low of this candle where it pulled down. It had already started making higher lows and higher highs. So your stop is right here. I'm going to go ahead and put this line here. I'm going to change this line up, a price level, and I'm going to call it stop. That's TOP. And we're going to change it to something like this. And I'll change it purple. Boom. So, and this was your entry. I'm going to change it. Edit properties. I'm going to change it. It's going to be a green dash line. And this was your entry. ENTRY. Uh-oh. Got my cap locks on. Boom. Uh-oh. Yeah, I leave it red. I thought I was changing that green. The properties. I thought I was changing the green. Boom. Change the green. Entry, stop. Now, our target, once we're in this thing, we just keep riding this. Our first target that we're going to be looking at is, since we got in way up here, we have to go back to our higher time frame. Is what I like doing. And my first target would be up here breaking this high. And I would actually put a range, for us to break that high. But I'm gonna just put a line here. And now let's put it the way I would actually do it. I would put at the bottom of this bearish looking pattern here is where I would actually have my target. So this is just me. Again, my first target. Let me do it like this. Let me see what it's going to look like, because I know how I am. But really my target is up here, but I have my first alert. Oh, I got these arrows set on here. That's what's going on. Control Z. And let me put a price level. It's there. That's my first target. I always have second targets, and then I get it once it passes my second target, I'm in a management zone, and I just manage I manage it based on using my indicator, my moving average indicator, and looking at it. What is coming forward with my pivots and my target for my pivots. and all is what I do. And now let's just look at some numbers here right quick. This is 438. That is 433. So that's $5 right there. $5 stop at 343 to 353. We'll say it's only 352, almost 353. Again, the range is up above 353, so that's $10. So I'm okay with that whole trade setup. That when I initially got into the trade, if I initially got into that trade based on what I was seeing happening on the chart, my indicators, that was like a 2-to-1 trade, a $5 loss for a $10 gain. I'm okay with that, and that's the other thing that you're going to be looking at from your indicators. Your entry, where are you entering at? The stop that it tells you that you should use based on your indicators, the target that you should be able to use based on your chart and your indicators. Is it a good enough trade for you? And in this particular case, it is a good enough trade for me, for my trading strategies and my trading plans that I usually do. And that was a good trade. So I would be okay with that. And then once I do start getting above this area, you manage it with, that's why I have this moving average on here. I manage it with this moving average. This is just one simple thing that I have on here. And I'm looking at my volume down here at the bottom. My volume staying green. Let me know they're still buying, more mainly buy volume. So I'm okay. So it won't be until I start seeing a bearish looking pattern and I cross back below and my volume indicator telling me they're beginning to sell. So most of the time, it's just best to get out. I can always get back in. And that's it when it comes to indicators. I know it's a lot of information. Take your time and review this and look at it and all. And the overall on this trade, we got in down here at 43. We ended up being able to ride this thing all the way up to a 93, I can say easily, and all. Once it made this double top, getting back up here, it made this double top, and that, you should have been out of that trade. Again, are you just saying, okay, is it really going down? You know, yeah, I think it's a high percentage of the time once you see these type of patterns at the top of the market, it's going to drop. So the thing is, you need to tighten up your stop and all. But then look what it does. It gaps over your stop. That's what it does. You know, that's why a lot of times you hear me. A lot of times I used to just say, I'm out of the market. I got stopped away from my trade so much and what I'm doing, and all because it still is based on what you see, what you're doing, and what your plan is at the time. And me, I don't like losing money. I like protecting any money that I've made, and I know I can get back in the market with no problem. My positions are not gazillion size where I have a hard time getting in the market. I can get in and out of the market at will. So again, that's why I can get out, and I'd rather just sit on my hands and wait until my indicators and my things could be a better entry and let me know that it's time to get back into the market. So that's it when it comes to indicators. Indicators just indicate you need to learn to use them to get you into the market. They give you that target that you need. That target is going to be, again, based on if you're long or short, it's going to be around supply or demand. Also, add in there giving you a candle pattern and what are your additional indicators telling you. You know, whatever it may be. On those particular charts, I was just using pivots, a moving average, and a volume indicator. Again, that's all I think is needed. When it comes to stop, as you can see, that's why you're still going to always be using, okay, say you actually thought you was buying at what you were selling at a supply area, but then you realize that supply area wasn't really supply, you know, and it ends up going higher on you. So that supply really wasn't supply. It was time, and it broke that supply level. It's time for you to get out of that area. Say that you was buying down at the demand area, expecting the market to go up. That demand area really wasn't demand. That really wasn't support, and all. And you need to be out of that trade. Also, at that same time, your indicator is going to probably show you, oh, nope, it wasn't time to go long, or nope, it wasn't time to go short, and you need to be out of that trade. Also, you're going to probably be getting a candle pattern. If you get all those things lining up, you need to be out of that trade. That's the whole thing. And as you saw back on the chart, a lot of times at those places where we was actually saying, you know, stop was, if it actually really happened, you would have got your indicator would have changed. You would have broken the supply or demand area, and plus your candle pattern wouldn't have gotten the confirmation that you needed for you to get into that trade. So the other thing that I was showing too, we was using multiple time frames. On there, I was showing you a day chart and a week chart. A day chart, it is all based on what time frame are you trading. Are you trading for days, for months, for weeks, for years, for decades? Is what type of indicators and what two time frames you may be using. And for a day trader, we might be using. I won't say what. I'm not using a 15-minute and an hour trade because I don't look to be in my trades. A lot of my trades are done in less than 15 minutes. So, but you're going to be using a day trader can be using based on if they're trying to swing the whole day or they're trying to stay in the trades a little bit longer. They can be using a smaller time frame, like a 15-minute time frame, to help them get in, to verify and give them that confirmation to get into their trade. And then they're going to be looking at something like an hour time frame or larger. Again, you use these larger time frames to cut out some of the, I call it noise of the market, to help you stay in your trade and all. So, and based on whatever indicators that the day trader may be using, and all, they're going to have indicators and still using those same candle patterns and support and resistance levels to help them decide if that trade is working or not working. And that's pretty much it. That's all you really, when it comes down to indicators, all you're looking for them to give you is an entry, a target, and a stop. You should be looking at more than one time frame. 2 time frames is good. More time frames, all based on you and your preferences, may be better. And it comes down to, what do you see? Do you see the money? And that's it. That's all I really want to share this time when it comes to indicators. Maybe a little bit different than what you was expecting, but indicators are user preferences. It's whatever you like and all. We have a set of indicators that we like here at Right Side Trading. I have a set of indicators that I like using. But what I've realized, and what we have realized, usually people still will come to you and they want to add something, or they want to change something, or they see the market in a different way. And all I usually say to them, is it working for you? If it's working for you, great. If you're trying to add it, because it's what you're used to being using, I go back to, was it working for you? If it's not working for you, let it go, because it's not working. For whatever reason, somebody else may have said it was good and it worked for them. And like it comes back with, when it comes to indicators, they are adjustable. And have they made some adjustment that they didn't tell you about that they're using? That's the other key thing. A lot of time when people are using indicators, they don't tell you all the little details of how they're actually using those indicators. So be careful, be careful, be careful when trying to use other people's indicators. Learn, just like when I showed you that Bollinger Band indicator, I didn't make any adjustments. That was the default settings. But I know back in the day when I was using that Bollinger Band indicator, the guy did make adjustments to it, and he shared those adjustments with me. The indicators that we use at Right Side Trading, I think all of them that we use, none of them are default settings. So that's why, again, it was kind of tough for me to talk about indicators and not show you this, and I couldn't show you the stuff that we actually use at Right Side Trading, because those guys are, our Right Side traders and all, and it's not fair to show the indicators that we have trained them with. So that's that. But what I showed you is giving you the foundation that you need to start looking into indicators and what you should be looking for if you're going to use indicators on your chart. One of the key things is that indicator should give you an entry, target, and a stop. Use multiple time frames, and do you see something there? What do you see? Also, always remember, one of the key indicators that I think every trader should know and understand is the pricing indicator, whatever you may be using. Like I said, a line chart cannot indicate too much to you other than the market is going up, going down, or going sideways, or some degrees of those things. A candle can show you a little bit more than what a line chart is going to show you. A bar chart, if you like using those bar charts that have a line pointing to the left and pointing to the right and just a thin bar in the middle, that's a thin candle, I call it. And if you're used to looking at that stuff, in my opinion, that's okay, and just my opinion. And then there's other variations of candles out there. If that's what you learn to use starting off as a trader, maybe you have gotten an understanding of how to use those, but adding additional indicators with that can help probably. And that's it. The thing is, it gets back to it's a user preference, whatever you learned with and whatever you can see. What do you see with your indicators? And that's all I really want to share at this time. This is Solomon, Right Side Trader. Hope this is being helpful and give you an idea of how I go about approaching and trading the market. Have a good one. Talk to you later. Bye. Like, share, subscribe, tell others, and all. And let's get me to that 500. Talk to you later. Bye.